Guys, I'm sure you have heard of the going concern assumption or the going concern concept in accounting. Now, what exactly is the going concern concept? It specifically says that an entity is considered to be a going concern if it is expected to continue its operations for the reasonable foreseeable future. And how do you define reasonable foreseeable future? It is a period of 12 months from the balance sheet date. And why is this assumption so important? Now think about it. Think about your non-current assets. Now what are non-current assets or fixed assets? These are those assets which are expected to be used for a period of more than 12 months from the balance sheet date. They are not meant for the purpose of resale. They are basically long-term in nature. Because they are long-term in nature, because their benefit is not going to be derived in the next 12 months, rather it is going to extend beyond those 12 months, you capitalize that and you show it in the balance sheet as a non-current asset. But assume that somebody tells you that your business is not going to continue beyond 12 months. There is no point of showing it as a non-current asset. You would much rather show it as an expense and expense it off in your P&L. Why is this assumption or why is the going concern concept so important? Every entity is expected to continue its operations for the reasonable foreseeable future, and assume that in case it is unable to do so, when you're preparing your financial statements, the disclosures or the notes to account should state that the management believes the company is not in a position to continue as a going concern. In that case, your balance sheet, P&L and other financial statements will not be prepared in the same way. What if financial statements are prepared and then the auditor comes and auditor raises a question on going concern? How and why will he raise a question on going concern? Think of a balance sheet in which the total accumulated losses far outweigh the total assets that are available. Now, have multiple flavors attached to this. Think about it from different perspectives. The company has a lot of accumulated losses, which far outweigh the total assets. So the net worth has been eroded, which means the company is not in a position to make payments to its creditors. The company is not in a position to sustain its operations beyond a particular point. And imagine these financial statements are presented in front of you and you are an auditor. This is the first thing that you should call into question, that these financial statements raise significant doubts about the ability of the company to continue beyond 12 months. So the readers of financial statements have a right to know about this particular fact. And then the auditor has to make that particular disclosure statement in the audit report that of course he is going to sign on. It is the responsibility of the management also to state that the company is not a going concern anymore. I'll give you one example. Back in my consulting days, back in my auditing days, I was looking at a balance sheet in which we were sitting on an accumulated loss of around 350 lakhs. And anybody who would have looked at that balance sheet would have jumped and said, okay, this balance sheet, whichever company this balance sheet is made for, is not in a position to continue even beyond 15 days. When we raised that particular issue, the directors of the company, they showed us that we have a firm commitment from the investors, and they have said that basis your valuation and everything, we will give you 400 CR of equity investment in the next 15 days. So because they had a firm commitment from the investor, although the company was sitting on an accumulated loss of 350 CR, a 400 CR firm commitment for investment from the investors made us, the auditors, change our stance, where we were initially calling it a company where the going concern crisis has arisen, to a company where the going concern assumption is not being questioned. So it's not necessary that just because a company has accumulated losses, it ceases to be a going concern. You have to look at all these possibilities and basically test the ability, question the ability of the company to continue its operations beyond 12 months from the balance sheet date.